Got on the 7.4.
So 7.4.
In
It's
this
this one.
fourth and sixth question. Yeah, in this fourth and sixth question.
Fourth question.
Yeah.
Consolidated balance sheet. I have not taught you yet. Right? Did I teach you?
Yeah, sir. You taught me.
I have not taught you yet, no?
No, sir, you taught me consolidated balance sheet.
Okay,
That
I taught you.
minority interest one.
Yeah.
Yeah.
Okay, yeah. And even the income statement. Okay, yes, correct.
Yeah.
Okay, fine. So we can do this sum then. Immediately after the acquisition, in its consolidated balance sheet, company P will report total assets of okay. So P acquires 80% shares of S on December 31st, 2022 by paying 120,000 cash to the shareholders of company S. So cash is being paid. Okay. The two firms pre-acquisition balance sheet as of 31st December 2022 and pro forma income statement is also given. Okay. So immediately after acquisition, the balance sheet P. So P after acquisition. So because we are acquiring, total we have to add up. So current, which it is in vertical format. So we'll do in vertical only then. 1 minute. Okay. Hello, can you hear? Hello.
Yes, sir. Yes, sir.
Hello.
Yes, sir. Hello, sir.
Yeah. Okay. So the balance sheet now. Current assets will be, you have to add these two, 7,20,000 plus 2,40,000. That comes to how much? Just calculate.
Nine lakh 60,000.
Current assets, I'll write here 7,20,000 plus 2,40,000. Then other assets. Acha, now in this current assets only cash is coming. We have already paid 120,000 cash. So this cash should be less now. It should be 600,000.
Yeah.
So in that case, it should be 840.
Yes.
Okay. Then other assets. Other assets 4,80,000 plus 1,20,000. So 6 lakhs. Just add up these two. Is it okay?
So 14,40,000.
Now current liability.
But sir, we will add investment in associates also, right?
No, this is acquisitions. No, investment in association is equity method. Minority interest will not come in investments in associates. Here minority interest will come. Okay, this is acquisition method. So
That
current
was
liability.
only the confusion.
Okay. Anyways, we'll do this then. See now 600,000 plus 210,000 is equal to 810,000. Okay.
Yes.
Then common stock. See, in common stock, we will take only our common stock. That means
Yeah.
42,000. So 42,000 and retained earnings.
That's 4,20,000.
Acha, sorry, 4,20,000. Retained earnings
1,80,000.
1,80,000. Now, see, their equity. Equity means here 1,50,000. Okay, common stock plus retained earning. From this, see, we have taken more assets because we deserve only 80%, but we have taken all 100% assets here.
Yeah.
So we have to increase our liability by 20% now because we increase the assets by 20%. So liability we will show as minority interest. So minority interest is 20% of this 20% of
1,50,000.
1,50,000.
It's
Just calculate.
30,000. 30,000.
Now you just add up all this.
Same, sir. 40,000.
This is it. So B is the answer. What is the next question?
So what you have told, like why we will not add that investment in associates?
Investments in associates. Okay, see. Let me. Okay, what I'll do is I'll just. I'll summarize that one again. See, when you are acquiring, okay, when you are acquiring, see, one is financial investments where hat table will come. That hat table, okay, held to maturity, available for sale and trading. Another one is 22. This is typically less than 20%. This one is 20 to 50%, which is investments in associates. Investments in associates, which is what significant influence they are having. Significant influence or board of directors, all this. Now here we will use equity method. In equity method only, how we will do is we will say investments in associates. And in investments in associates, we will just, further after that, we will add proportional profit. After that, we will minus depreciation, proportional depreciation, like excess value of the asset that we have taken. Then minus dividend, cash dividend received. Okay, this is all investment in associates value. We will also add in dividends, cash received, but they will not ask you this part because cash has many other component, but they will ask you this part. Okay, now coming to acquisition is what we have done now. So here there is no minority interest on the left hand side.
Yeah.
Okay, then okay, this is fine, this is okay.
Yeah. Yes.
What is the next question?
Sixth one.
On December 31st consolidated balance sheet, company P should report a minority interest of. Okay, so minority interest is on December 31st. Okay, yeah, on December 31st 2023. So this is, when is this one? 2022. Okay, and then we are acquiring. So 2023, this is the income. So we'll see now the income statement of P. Income statement of P. So income statement also, revenue we will add up all together. Revenue. Revenue 900,000, 300,000. So 12 lakh, right? Revenue. Expenses 600 and 240. So that comes to 840. Net income. Net income is net income you calculate, deduct this. It should be 360,000. Just check.
Yes.
Done.
Yes, sir.
Now out of this, minus minority interest. Minority interest is 20% of the profit that we got from another company, which is 60,000. So it doesn't belong to us. Our liability will go up because we have taken 20% more revenues and expenses. Okay,
Yeah,
not 20% more income we have taken. So 20% more liability. How much is this coming to?
12,000.
So this 12,000 we will take it to minority interest. So here it will be minority interest will be. So what is the new minority interest only they have asked? No? Initially it was 30,000. Now we will add proportional profit. So 20% of 60,000. That comes to what? 12,000. So plus 12,000. So the question is, should report your minority interest of 42,000. Right, these two. Let's check the answer.
Yeah, sir. Wait a second. No, sir, answer is B, that is 39,000.
Okay. Did we miss anything? So 3,000 difference. Acha, that is because of this dividend then. Let's calculate dividend. So dividend, 15,000 dividend. So dividend is paid 15,000. If dividend is paid 15,000, acha, 15,000. Okay, let me just check the answer once. This is 7.4. Sixth question. Yeah, so minus 3,000. Yeah, because this amount has been paid here. This amount has been paid as dividend. So from this 15,000, 20% comes to 3,000, correct?
Yes, sir.
So this 20% is not with us. So minus 3,000 as well. Dividend paid. So 39,000. Okay, 30,000 plus 12,000 minus 3,000. Done? This is okay?
Sir, I'm ready.
Ah. Once done, you let me know. Okay.
Yes, sir. Done, sir.
Okay. Okay, that's it, right? So many questions only, no?
Yeah, sir.
Okay. So moving ahead, now we will do some goodwill. So that means we have done till here, right?
Yeah.
Uh, okay. Next one is, so this business combinations all we have done. Then next one is this one. Okay. So this we will do the sum first, then we will. Okay. So goodwill, how do we calculate? This formula is also required. Okay. Okay. See, first we will do one sum. I'm giving you one sum. After that, we'll come to the book. Okay.
Okay.
So this is calculation of full goodwill and partial goodwill. Okay. Okay. Now, first of all, what is this one? Just read this much. Under the acquisition method, the purchase price is allocated to the identifiable fair value. Okay. Any remainder is reported on the balance sheet as goodwill. Goodwill is said to be an unidentifiable asset that cannot be separated from the business. See, first of all, so I'll go by this method now, under acquisition method. Okay. For a minute, I'm not following this under acquisition method. Acquisition method means you have acquired the entire company 100%. Okay, here. Goodwill under acquisition method. So I'll give you one question. Acquirer. 30,000 goodwill. So this is not goodwill, this is equity. Then acquiree. You can also keep writing this one, okay? Fair value is
Yes.
1000. Okay, this is the given condition. Also one more, unrecorded liability towards statutory dues of 100. Okay. So this is an example of off balance sheet uh, off balance sheet transactions also. Okay, unrecorded liability is there. Written till here.
Yes. No, sir, just acquire balance sheet.
Hello.
Yes, sir, just a second. Yes, sir.
You could hear my voice, right? I could not hear
Yeah.
you. Only I.
Yes, sir.
Huh. You have written till here.
Just acquire balance sheet.
Huh. Yeah. So you finish writing, then you let me know.
Yeah. Done, sir.
Okay. So goodwill is equal to, see this, uh, excess of over the fair value of the net identifiable assets of the company. Okay. So goodwill is equal to excess of over the fair value of the net identifiable assets of the company. Okay. So um, yeah, so we will see fair value of the assets. So that will be this much plus this one. Okay. Goodwill is not an identifiable one. Okay. So it will be what? Building plus land plus investment plus cash minus loan minus unrecorded liability. So building is what? Building is fair value, okay? 10,000, 1,000. Plus land is 2,000. Investment is 0. Cash is 700. Loan is 500. Unrecorded liabilities 100. Now you just calculate all this.
$3,100.
4,100.
No, sir, 3,100.
3,100. Okay. And we have paid how much? We have paid, acha, that I did not give you. So let's say we have paid uh, let's say um, we have paid 1 minute. We have paid, imagine 6,250. Okay. All 100% we have bought for 6,250. So 6,250 minus 3,100. Just calculate.
3,150.
3,150. Okay. So this is under acquisition method. This is okay, goodwill.
Okay.
Okay. Okay, just write down all this first.
Done, sir.
Now, full goodwill. Okay. So full goodwill is also more or less same only. Full goodwill means what, Now, okay, just I'll write again the question. Same only, but instead of, if I write again, it will be easier to understand. Equity 30,000, then goodwill 1,000. You also write again, it will be easier.
Sir, this is on the equity method.
No, we are just focusing on goodwill now. Goodwill calculation only under acquisition method. Now this is full goodwill. Okay. Just keep everything separate only, otherwise you will get confused. Now this is goodwill.
Yeah.
Hmm. So here, see, there is a slight change here. You mentioned acquired 80 percentage at the rate of 5,000. That is the only thing. So in full goodwill, you are acquiring only, but you are not acquiring all 100 percentage, less than 100 percentage. So here, so how to do this one? See, this full goodwill is so full goodwill is followed in US GAAP, full goodwill method. Okay, now what is this now? See, even though this is 80 percentage, how to do the first step is under full goodwill method. Even though it is 80 percentage, I will still convert it into 100 percentage. So 80 percentage is for 5,000. 100 percentage is for what? Because I am taking full goodwill method. Calculate.
6250.
Yeah. So in this case, I have calculated 6250. It is not given. In the previous case, there was no need for me to calculate. It directly said 100 percentage all 6250 only.
Yeah.
Here, I am calculating here and I'm deliberately pushing it to 6250. Okay. Then second step is, so rest is all same only. Rest is fair value of net identifiable asset. So fair value of net identifiable asset is this part, this one, this part and this one, right? Which is, we have
31.
already done this one. Yeah. But I'll still write it. Building plus land plus investments plus cash minus loan minus unrecorded liability. Building is 500. Land is 2000. 0. Cash is 700 minus 500. Unrecorded liability is 100. So which comes to 3,100. Okay. So now I will calculate with so with 6250 minus 3150. Okay, fine. Now I'll create the balance sheet also. So balance sheet for full goodwill. So first I'll write, or you write till here, then I will create balance sheet.
Returns or return.
Written. Okay. So now I'll just copy this part first. Okay, equity 30,000. Goodwill 1000, building 1000, Goodwill 1000, building 1000, and then cash 28,000. 28,000. Okay. So now I will go to acquiry. Now I have to take all these assets as well. Rest is all same. See, so now I'm going to take this entire assets 1000, correct? Because I have calculated fair value all. So what is that 1000? Building. So I will mention here 1000. Then next one is land, 2000. So land, I'll write it here. Land 2000. Then investment 0. So I don't have to write cash 700. So cash plus 700. Then bank loan is 500, and here 100 unrecorded liability. So loan 500 and then unrecorded liability. Liability is 100. Yeah, now you see right hand side, you just check how much is the balance.
$33,700.
33,700. Acha, we forgot to add goodwill 31. So plus 3150. Now you calculate.
36,850.
One more mistake is there, because we have paid 5,000, correct? So because we have paid 5,000, my cash will come down by 5,000. It will be 3,000. So we should be careful about this one. Okay.
31,850.
Yeah. This mistake is very much possible. This one. We tend to forget this. Okay. 31,850. Now here left hand side, if you see, it will not be 31,850.
Yeah.
So what is the balancing amount? In what is the gap? How much is the gap?
28,250.
This is 30.
Sorry.
30,000.
Uh, 1250.
So this 1250 is called minority interest, because remember I have taken all their assets, fair value total, na? So I have to include minority interest as well. Okay.
Yeah.
Now this is the balancing figure, but there is a formula also to calculate that you should remember as well. So the formula is, see, they have mentioned the formula is here, minority interest formula. Minority interest is also called as non-controlling interest. Okay.
Yeah.
So here for full goodwill, it is percentage not owned. That means 20% is not owned. So minority interest is equal to 20% into purchase price. Purchase price divided by, purchase price is what, 5,000, divided by percentage owned is what, 80,000, 80 percentage. Okay, so in short, this is 20% of 6250. Okay, and that comes to 1250. So how I remember this is minority interest is this I consider as the total fair value of the company into 20%. That 20% is not owned percentage. So not owned percentage into total fair value of the company. Because from this total amount 6250, 20% I don't own.
Okay, sir.
Now you write down all this.
Done, sir.
Then okay.
Done.
Okay. So now you got the difference between acquisition method and full goodwill.
Yes.
Just that acquisition means 100% you are acquiring. Okay. Now and full goodwill is allowed. Uh, in US GAAP, there is something called partial goodwill. US GAAP does not follow that one. US GAAP follows only full
Full
goodwill.
goodwill. Okay.
So now you read this part. Read till here only.
Yeah.
Subsidiary is greater than the fair value of the subsidiary's identifiable net assets. See, they may ask this kind of theories also. Okay, so you should know how they are articulating all this.
Okay.
Now coming to partial goodwill. Partial goodwill is allowed under IFRS. Under IFRS, both are allowed. Okay.
Okay.
Uh, so here also there is one distinction they are doing. IFRS permits the use of full goodwill approach also. So that means um, they used one word required. Yeah, see this one. This line is interesting. Full goodwill is required under US GAAP. That means it is a must only to use full goodwill only. Whereas under IFRS, it is allowed. That means IFRS, it is okay for both partial. So I'll write here. Under US GAAP, only full goodwill is allowed. Then under IFRS, uh, okay, both are allowed. Both partial goodwill and full goodwill are allowed. Now, what is this partial goodwill? We will see. So now partial goodwill. Now again I'll write the same question so that it is easier. Acquirer equity 30,000, goodwill 1,000, building 1,000, cash 28,000. Equity 1,500, loan 500, goodwill 100, building 500, and fair value is 1,000. Land 500, fair value is 2,000. Investment is 200, fair value is 0. Then cash is 700. This is 2000. Okay, so here now 80% acquired for 5000. Written question.
Yes, sir.
Okay, so in partial goodwill, so how should I do? So partial goodwill is, so in partial goodwill, I will not change the amount to 6250. I will stick to only 5000. But then fair value, I will calculate all, because finally I have acquired, okay? 80% I have acquired.
Yeah.
Fair value of net identifiable assets, which is building, all this. Okay. And this one also, unrecorded liability. Unrecorded liability towards statutory dues of 100. Okay. So this much and this much. So building plus land plus investment plus cash minus loan minus unrecorded liability. Investment is 200. Cash is 700. Loan is 500. So this comes to 3100. So goodwill is equal to, I will not increase the amount, I will directly calculate. Okay, here, sorry, I will take only 80%. Okay, so because I am not increasing the amount, sorry, here I am not increasing the amount. Here also I will take only, now I will take only 80% while calculating goodwill. So 80% calculate how much it comes to?
2480.
2480. So my goodwill is equal to 5000 minus 2480. How much?
2520.
2520 is my goodwill. Okay, now when I will calculate the balance sheet, see, because I have acquired, I'm going to take all the total value. Okay, but goodwill point of view, I will I have taken partial only. That's why it is partial goodwill. So now here, see, so I'll just copy all the balance sheet again. Goodwill, building, cash and equity here. So goodwill is 1000. Building is also 1000, correct? Cash will be less, right? Cash will be 28 minus 5000. Okay, 23,000, because we have paid cash. And equity will be 30,000. Now I will add this goodwill. So plus goodwill. So goodwill is 2520. Okay, then building, land, investment is 0. Building, land, cash. So building plus 1000. Then land. So I'll write land here. Land is 2000. 2000, right? Building 1000. Cash plus 700. So plus 700. Then loan is 500. Then unrecorded liability. Unrecorded liability. Unrecorded liability is 100. Okay. Now you calculate right hand side, how much is it coming to?
So total is 31,220.
Ah, 39,
No, sir, 31,000.
31, 220. So now here you calculate the balancing amount, which will be minority interest.
$620.
But there is a formula. The formula is again now as I said before here, where did I find out fair value of the company?
20% of 5,000.
Uh, no. Over here there is a change. Fair value of, okay, so for partial minority interest for partial goodwill, minority interest in partial goodwill. Okay, is equal to fair value of net identifiable assets. So these are all the problem here. The rules will keep changing like this. Fair value of net identifiable asset into percentage not owned. So fair value of net identifiable asset was 3,100 into 20%. Calculate.
Yeah. So it's 3,100 or 3,120.
This one, 3,100. Fair value of net identifiable asset.
620.
That is what it is here, right?
Yeah.
Okay. So now all these, these are all the nuisance here. So the formula is all changing like this here. See, this is goodwill formula given here. Partial, and also partial goodwill is equal to percentage owned into full goodwill into percentage owned. That means 80% of full goodwill is partial goodwill. So let's cross check that one. Take 80% of full goodwill. Full goodwill was full goodwill was
1250.
3150, no? Initially full goodwill into 80% you do.
2520.
Understood this part? Is it okay?
Yes, sir. So just have to write balance sheet.
Ah.
Yeah. So its present value of net identifiable asset into percentage for minority interest.
Percentage not owned.
Done, sir.
Okay. Okay, so this is done. I'm just wondering, will it become too much for you? Should you practice this before we move ahead?
Just I'm also thinking like it's confusing.
Yeah, it will be confusing. What you do is you just practice this well, and then you may try all these sums. Once you are fine, these sums will be easy only for you. The sums and impaired goodwill, you don't have to worry. That is level 1 kind of. Again, rules only. So what we will do, we will stop now here. You just practice whatever, we have done so far.
Okay, sir.
Okay, and then try this one. Take this as homework. This is very easy. Once you practice that one, this will become easy.
Okay.
Okay, we'll stop now here. Okay,
Yeah. Thank you, sir.
okay, bye.